You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-Mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-Mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Monday, 20th day of May, 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. This is our second live broadcast of the day. Our first live broadcast, our live training room. Now that's reserved for members only and those who are taking their 1-week free trial. If you haven't taken your free trial, go to mytradingiq.com, and at the top of the page, there's a link that says 5-day free trial, no credit card required. Click the link, fill out the registration form. Make sure you get it filled out properly because it's an automated process. Once you hit submit, we'll do our best to same day get your desktop set up, get your indicators indicating, and then the following day, your trial will actually begin. Now you get 5 consecutive trading days, even if it stretches over a weekend. So it doesn't matter what day of the week or weekend or hour of the day that you sign up for the trial, you will get 5 consecutive trading days. In fact, basically, it turns 5 days into 7 days because some markets don't sleep on the weekend. All right. Now, when the live training room ends every day at 11:30 a.m. Eastern, take a 30-minute break and we come back for this broadcast, the afternoon broadcast, which is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. Now, there's a couple different ways to join this broadcast live. Best way, you only have to do this once. Simply go to mytradingiq.com, scroll down the page to where it says afternoon broadcast. Click that link, fill out that 30-second registration form, and you're done. Like I said, you only have to do it once. What will happen going forward is every trading day, you'll get an email about an hour before this broadcast starts. There's a link in the email. So at 12 noon Eastern, all you have to do is click the link in the email and it will automatically log you into our platform. Benefit of doing it that way is you have access to the question box so that you can ask questions and participate in the discussion. Of course, there will be days when you're out of the office, away from the desktop, but you still want to join live. And there'll be days when you're busy and can't join live, but you do want to get caught up later. You can do that too. I'm talking about our YouTube channel. It's easy to remember. youtube.com/CFRN. You've already got the YouTube part memorized, so really all you have to remember is CFRN. Not only do we broadcast live every trading day on our YouTube channel, we also archive each and every daily broadcast. Currently, there are over 2,500 daily episodes archived for your educational and viewing pleasure. If you're new to the world of CFRN, it's a great way to get to know who we really are. Not just today, not just this week, but how we've evolved over the years. Thanks to the power of YouTube, you can scroll back 6 weeks, 6 months, 6 years, even more. And then just pick some days at random. Doesn't matter. Watch a little bit, fast forward a little bit, pick another day, watch a little bit. You'll discover the thread of connectivity, the thread of continuity that's woven through each and every daily live broadcast. youtube.com/CFRN. Now, it appears the Supreme Court just delivered a massive 6-3 ruling. Let's see, it keeps popping up on my phone, so let me just go ahead and look at it now. Supreme Court rules no quick hearing required when police seize property. Now, I've got an article I'm going to share with you because the Supreme Court's about to go on their summer vacation, like we did when we were kids. What is this one about? When authorities seize cars and other property used in drug crimes, even when the property belongs to so-called innocent owners, they are not required to hold a prompt hearing, a divided U.S. Supreme Court decided. The justices voted 6-3 to reject the claims of 2 Alabama women who had to wait more than a year for the return of their cars. When the cars were being driven by others, police pulled them over and took them after discovering drugs. Civil forfeiture permits authorities to seize property without requiring proof that it has been used illegally. Opponents call the practice legalized theft. For the conservative majority, Justice Brett Kavanaugh wrote that a civil forfeiture hearing to ascertain if an owner will lose the property permanently must take place on time. However, he added the Constitution does not also call for a different hearing to determine whether police may temporarily retain cars or other property. Justice Sonia Sotomayor wrote in a dissent for the liberal members of the court that since police departments frequently have a financial incentive to retain the property, civil forfeiture is vulnerable to abuse. Oh, come on. Who's Sonny and what's his name on Miami Vice? You know, whose cars are they going to drive if they can't have these forfeited Lambos and Ferraris? Sonny Crockett and I forget the other guy's name, but you know who I'm talking about. Anyway, let's get going. I just kept popping up on my phone. I was like, wow, this is really something huge. Well, I guess it is huge to those who've had their car taken, and it wasn't their fault. But in the back of your mind, you're going, yeah, my cousin's pretty sketchy. I figured he was probably up to no good. I hesitated to even loan him my car. Well, when in doubt, hide the keys. All right, we'll get started with our daily devotional and a word of prayer. Topic of our devotion, which we started last week and will continue through this week. It's really a study of the book of James. The title is Faith Works. Today's scripture is James 2, verses 14 through 26. And after our devotional and daily prayer, we'll get into the markets. Got a couple of articles to share with you. Not much happening in the markets. We're getting more of that flat line. Starting to get accustomed to it. They used to say sell in May, go away back in the fall. You know, I don't know if we're back to that point or not, but we have mentioned for a couple months now about how flat the European markets have been and that we hope that contagion wouldn't spread to the US. And based on the last few weeks, it's been pretty flat. We had one big candle today in the indices. when Wall Street opened, which is typically the biggest candle of the day. But we'll look at that when we go to the charts. And then about 12:45, 12:50, Michael will join us, give us a recap of what happened in the live training room. Then we'll go live on TradingView for 30 minutes, do some live trading, and then I'll wrap things up with our good word for the day. So here we go, James 2, 14 through 26 from the Message translation. Dear friends, do you think you'll get anywhere in this if you learn all the right words but never do anything? Does merely talking about faith indicate that a person really has it? For instance, you come upon an old friend dressed in rags and half-starved and say, "Good morning, friend. Be clothed in Christ. Be filled with the Holy Spirit," and walk off without providing so much as a coat or a cup of soup. Where does that get you? Isn't it obvious that God talk without God acts is outrageous nonsense? I can already hear one of you agreeing by saying, "Sounds good. You take care of the faith department. I'll handle the works department." Not so fast. You can no more show me your works apart from your faith than I can show you my faith apart from my works. Faith and works. Works and faith. Fit together, hand in glove. Do I hear you professing to believe in the one and only God, but then observe you complacently sitting back as if you had done something wonderful? That's just great. Demons do that. But what good does it do them? Use your heads. Do you suppose for a minute that you can cut faith and works in two and not end up with a corpse on your hands? Wasn't our ancestor Abraham made right with God by works when he placed his son Isaac on the sacrificial altar? Isn't it obvious that faith and works are yoked partners? That faith expresses itself in works? That the works are works of faith? The full meaning of believe in the scripture sentence, "Abraham believed God and was set right with God," includes his action. It's that weave of believing and acting that got Abraham named God's friend. Is it not evident that a person is made right with God not by a barren faith, but by faith fruitful in works? The same with Rahab, the Jericho harlot. Wasn't her action in hiding God's spies and helping them escape a seamless unity of believing and doing what counted with God? The very moment you separate body and spirit, you end up with a corpse. Separate faith and works, and you get the same thing, a corpse. Now, we know that salvation has nothing to do with our works. That work was done on the cross. Faith, that's our job. Again, that was James 2, 14 through 26 from the Message translation. James introduced the idea of hearing and doing at the end of chapter 1, along with the definition of pure and undefiled religion, which, as we spoke about, is to care for orphans and widows in their distress. Chapter 2 then put a spotlight on a specific example of worldly behavior in the church that contradicted that definition and the biblical standard of loving God and loving our neighbors. Our actions and beliefs must line up with each other. This is the crux of James' message. Faith works. Faith and works aren't mutually exclusive. In fact, James tells us that faith apart from works is dead. Works don't save us, but good works should follow true faith. James said even demons know the truth about God. They could give all the right Sunday school answers, but they don't faithfully live for Him as Savior and Lord. They don't submit to His authority in their lives. Theirs is empty, dead faith. It's merely belief. Head knowledge doesn't save you, doesn't make you a Christian. Doing this Bible study doesn't make you a Christian. Real faith is demonstrated in real action. Faith works. Book of James is like a commentary on the ministry of Jesus applied to our lives as Christians. Remember the parable of the Good Samaritan in Luke 10. Jesus told a story of 3 men encountering another man who had been beaten, robbed, and left bleeding on the side of the road. The first 2 men were a priest and a Levite, highly respected religious figures in the Jewish community. But they failed to live out the essence of the law they taught others. Love your neighbor as yourself. Their religion was worthless because what they claimed to believe in their minds didn't result in changed hearts and behaviors. Join me in a word of prayer. Heavenly Father, thank you for the words we just shared in James 2, recognizing that faith without works is dead. Lord, help us to live out our faith through our actions, demonstrating your love and compassion to those around us. Strengthen our hearts to serve others selflessly, and guide us to be doers of your word, not just hearers. May our deeds reflect the faith we profess, bringing glory to your name and furthering your kingdom on earth. It's in Jesus' name, believe and pray. And everybody said, amen. Amen. And happy Monday. All right, let me give you the numbers from around the world. Start here in the U.S. with the cash markets, or indices as they're called. Currently, the Dow is down 13 points. NASDAQ is up 102. S&P 500 is up 14. The Russell 2000 up 13. No movers, no shakers there. In the commodity basket, crude oil down 29 cents, trading 79.77 last. Gold up $12.90, trading 24.30.30 last. And look at silver, up another buck today, well, 96 cents. That's a little over 3%. Remember, when the price of silver moves $1, that's worth $5,000 per contract traded. So silver's up 96 cents, trading 32.21 last. And I think Friday we had almost a $2 move. Silver looking very bullish. Remember, the all-time high in silver is 50 bucks. We've been there twice in history. Once, the Hunt, courtesy of the Hunt brothers, who tried to corner the market on silver. And then a few years back, it just did. So, interesting. All right, the Asian markets at the close, the Nikkei up 282 points, the Shanghai up 17, the Hang Seng up 82. Movers, no shakers there. And in the European markets at the close, FTSE up 4, the DAX up 64, CAC up 28. Again, no movers, no shakers. But we did have a green day in Asia. It was a green day for the UK. But at the moment, it's a mixed radio Monday here in the US of A. Got 3 of the major indices in the green. The NQ, the S&P, the Russell. Not by a lot, but in the green. And we have the Dow just slightly in the red. It tries to recapture 40,000. Oh. All right. A couple of articles worth mentioning. Let's see what they were. As I said, the Supreme Court's going on vacation, ending their term, as it's called. And they've rejected an appeal from payday lenders to invalidate a consumer finance watchdog, the Consumer Financial Protection Bureau. And before their summer recess starts in late June, the justices are expected to make rulings that could limit the reach of social media, the ability of other federal agencies to crack down on companies, and the power of bankruptcy courts to shield powerful parties from liability. Now, the question on social media is, should tech giants be allowed to decide what content and users are allowed on their social media platforms without government interference? Now, Florida has already taken action, blocking major platforms like Facebook, Instagram, Meta, TikTok, and X from intentionally removing the accounts and posts of candidates running for political office in the Sunshine State, as well as journalistic enterprises that have at least 50,000 paid subscribers or 100,000 monthly active users. The Texas law directs social media platforms with more than 50 million monthly users to refrain from banning content that expresses a viewpoint, regularly disclose the content they remove, and publicly post how they police user content. Now, it's interesting. They have to disclose the content they remove, which is in effect showing the content that they didn't want you to see to start with. Maybe they don't have to reveal. Maybe they don't have to reveal it to the public, just to the government. Well, say goodbye to the unlimited shrimp deal at Red Lobster. It bankrupted them. True story. Seafood restaurant chain Red Lobster filed for bankruptcy, succumbing to onerous leases, high labor costs, and a disastrous unlimited shrimp promotion. This is not satire, this is true. The Orlando, Florida-based company filed for Chapter 11 protection on Sunday, listing assets and liabilities of $1 billion to $10 billion each in its bankruptcy petition. The filing allows the company to keep operating while it works out a plan to repay creditors. Red Lobster plans to hand control of the company to its lenders, led by Fortress Investment Group, who have agreed to provide $100 million in financing to support the chain through bankruptcy. The takeover offer is in the form of a stalking horse bid, meaning it will set the floor price for Red Lobster's assets and is subject to better bids should any materialize in the coming weeks, according to court documents. The restaurant chain had been deteriorating for several years, with diners down around 30% since 2019. While the business had shown signs of recovery since the pandemic, sales declined sharply in the last 12 months. It lost $76 million in 2023. Inflationary pressures have kept customers from dining out, and higher labor costs strained the company's finances. A material portion of Red Lobster's leases were priced above market rates. In May 2023, the company changed its $20 Ultimate Endless Shrimp from a limited time offer to a permanent promotion, and it ended up costing the company $11 million as diners devoured expensive plates of shrimp. Red Lobster started out as a single restaurant in Lakeland, Florida in 1968. It expanded rapidly in the 70s and 80s and developed a loyal following for its Cheddar Bay biscuits. The company now operates more than 550 restaurants in the U.S. and Canada. Now, the restaurant chain, which has been owned by seafood supplier Thai Union Group PLC since 2020, serves 64 million customers per year and purchases 20% of all North American lobster tails, as well as 16% of all rock lobsters worldwide. If you lived through the 80s, you remember rock lobster. Now, so see, this isn't just going to affect Red Lobster and Red Lobster employees, but there are many small businesses out there who have only one customer, Red Lobster. But they're not shutting their doors just yet. They're trying to get through this bankruptcy deal. Thai Union and Red Lobster have been in talks with lenders for an out-of-court deal that would hand the creditors 80% of the company, but those discussions fell through. Lenders made additional loans worth $20 million to Red Lobster in February, but they weren't willing to put in more money without support from the owner, according to court papers. Red Lobster said it is also investigating the shrimp deal, including how it was marketed in restaurants and if Thai Union exercised an outsized influence on shrimp purchases. This could get interesting. We may need Matlock to figure this one out. The chain employs 34,000 people in the U.S. and 2,000 in Canada. Last week, it did close 93 of its underperforming stores. Wow, they serve 64 million customers per year, and they can't do it profitably. And if you're trading crude, you would think that things would be very volatile, but they're not. Even with big events happening in the Middle East, oil trading has been relatively lackluster as volatility seeps out of the market. Prices have stayed range-bound, with traders searching for direction ahead of OPEC's production meeting in June. That sent a key measure of market swings to the lowest since roughly 5 years. Brent's second-month rolling volatility reached the lowest level since 2019. Brent hovered near $84 a barrel after posting its first weekly advance this month, while West Texas Intermediate traded near 80 bucks. Both markets drifted between small gains and small losses so far today. All eyes continue to monitor developments in the Middle East. Iran's president and foreign minister were killed in a helicopter crash. Separately, there are concerns over the health of Saudi Arabia's 88-year-old king, who is father of the country's de facto ruler, Crown Prince Mohammed bin Salman. Analysts have downplayed the significance of the events for crude futures markets, noting that oil policies and exports are unlikely to be affected. We shall see. Despite crude's recent directionless trade, global benchmark Brent has gained almost 10% this year, supported by OPEC supply cuts. Oil's rally has cooled since mid-April as money managers wait for signs of improving demand ahead of the summer season. Market watchers are turning their attention to the upcoming meeting of the producer group on June 1st, where a rollover of existing curbs is expected. And that's the news that's fit to print. Oh, this one, got Tesla announced today. I won't go through the whole thing. They're firing another 600 people. I mean, they've been hit by round after round after round of layoffs over the past month or so, to the degree that it's somewhat hazy exactly how many employees have been affected or how many they have left. And they announced today they're slashing another 600 jobs at its facilities in California, running the gamut from factory workers to highly qualified engineers. I know it looks like it can, guys, but the market cannot just go up forever. No, it seems like it can. But I'm here to tell you, can't. Now, we're in week 303 of Logic 247. We've issued over 16,600 individual handcrafted alerts. We've averaged 20% or less of the alerts being stopped out based on market structure and a very simple process we teach all of our passport holders in their one-on-one mentoring sessions. The markets were so flat last night, I put out a whopping 1 alert. So, very quiet start to the week, and I haven't put anything else out today, basically for the same reason. Yeah. I don't do it for entertainment purposes. It's to help you learn how to read the chart. And when price isn't moving, well, there's not much to learn. Now, long before we had the Logic 247 alerts 303 weeks ago, we had our original alert service, the Concierge Trade Alerts. And they're a little bit different. The Logic alerts have an entry price, an initial target, additional targets, and then a final trade to target. Those are gathered by simply looking left. Okay? So the Logic alerts are your first step in learning how to read the chart, read what price action is telling you, and understand it so that you understand what the next high probability move is. Now, again, over 300 weeks, over 16,000, I think it's 700 alerts at this point. We've still averaged getting stopped out 20% or less on a weekly basis, okay? So if you're trying to find that holy grail where you never get stopped out again, you're going to waste a lot of time and a lot of money to come to this conclusion. It doesn't exist. I don't care how clever the ad copy is on the website or the email. It not only doesn't exist, it can't exist for more reasons than I have time to go into today. But it would defy the laws of science, the laws of physics, even the laws of God. It simply isn't possible. What you need is a definable edge, and you need to learn to apply that edge when it presents itself. No hesitation, no jumping the gun. Trading's not easy, but it can be simple. Now with the CTAs, you're stepping up your game because with the logic alerts, you've learned where those additional targets come from. So now with the CTAs, you've just got a long target and a short target. You get to fill in the space in between. First thing you do when the report is published is make note of where price is on the 30-minute chart of whatever markets you trade. So last night the report came out 10 minutes after the market opened for the week, and price is always going to be between these two numbers. Okay. Now, while you're making a note on your 30-minute chart where price was at that time, draw a line in the sand at the long target, a line in the sand at the short target. Those will serve as great visual cues to keep you on the right side of the street. If price gets above the 30-minute BBC, it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. You now get to look left to spot potential obstacles, prior swing highs or swing lows that become current resistance or support, and you learn how price behaves at a weekly trading zone. Price is always trying to reach a weekly trading zone. We've published the zones since December 14th of 2009, closing in on 15 weeks, 15 years. They come out Monday morning at 6:15 a.m. Eastern, and once they're published, they're carved in stone for the entire week. Now, any alerts that go out Sunday night are based on last week's zones because the new zones don't come out till Monday morning. So on my charts today, you'll see last week's zones. Tomorrow, you'll see this week's zones. Beyond that, just resist the urge to make it more complicated. As long as you know which way the wind is blowing, it's pretty simple to reach your goal for the day. Lately, we've had days where it's pretty difficult to determine which way the wind is blowing. Today, we know it's blowing northerly. Anyway, back on Thursday, we put in a new all-time historic high at 53.49. Today's high is 53.48 and a quarter. Yep. And that's Friday. You can barely see Friday. So we did get a little movement, but 49, 48 and a quarter. So we need to go 3 more ticks to have an exact double top, which, again, Bloomberg said last Monday that was in their opinion, the most powerful bearish signal. So we'll see. We'll see how today ends. The step line and blue and climbing are running parallel. The reason we're looking at a daily chart is because the institutional traders, the ones who actually move price, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Has to do with account size. It's that simple. So no matter what you trade, whether it's the S&P, another futures market, stocks, crypto, Forex, ETFs. If you'll spend 2 minutes with the daily chart of whatever you're getting ready to trade, you're literally looking over the shoulder of the deep pockets that move price. And you're able to see where the obstacles are. Now, on the 7-tick range chart, unless you scroll way left, you're not going to see that 2 trading days ago, 4 physical days ago, where that all-time historic high is. But by looking here, you can clearly see it. And you got to know that that's an obstacle until price overcomes it. Then the question becomes, does it overcome it by just a little bit? Or does it significantly overcome it? Okay. Now, we had an all-time historic high back here on April 1st at 33.5. So when we overcame it at 49, that was really just a little bit as far as a daily chart goes. On a smaller time frame, of course, it looks like a lot more. So again, I'm just encouraging you, spend a couple minutes with the daily chart before you start trading, and it'll help make things simple. Trading's not easy, but it can be simple. This is the 30-minute chart where all alerts are created. The vertical line separates today, Monday. Here's Friday. Here's Thursday. And here's that flat market. Flat market. And then the day at 9:30, we got a little bump. But we failed to take out last Thursday's high. Step lines crossing blue and climbing. Price most likely pulling back to the BBC. If price gets below the BBC, then you got a nice trade from like 32 down to 29. That's about a 3-point move. On the upside, though, you got to be really careful because you're not going to have a lot of room to run to today's high. And if you hit today's high and back over here, see on your 7-tick range, you won't see this, but on the 30-minute chart, you can see it, and we saw it on the daily chart. On the Dow, here's where we opened last night, flat city, came down to the BBC, the pullback held just a little bit, then we dropped below it, and then on that opening candle on Wall Street, which is typically the biggest candle of the day, we reached down and touched the short target, basically to the tick, and then we bounced, and we put in a higher high than Thursday. Okay. Now these are futures prices, but the key number in play here is 40,000. Spot prices and futures prices differ. Russell, here's where we opened, and we just consolidated along the weekly zone. Then we made a drop right to the short target. Then the Wall Street Open got us back above the BBC, took us up to the long target, and then we ran into resistance from last Thursday. This high right here has become today's high so far. So we hit the short target and we hit the long target. But we mostly just consolidated sideways. That's what you're going to see in most of the markets. On the NQ, opened right at the weekly zone. Made a run at the long target, but we ran into red and falling, which took us back to the BBC. Then we overcame red and falling, hit the target. When the market finds a resistance, now this was resistance created Friday, that right there is Friday's high. Okay. Resistance will always send the market looking for support, which it found at the weekly zone and this bullish cross right here, which happened early in the session last night. And then here's that 9:30 candle, and we did slightly take out Thursday's high. Thursday we had a high at 18,760. Today's highs 18,779. We're now on the July contract in crude. Here's where we opened last night. We pulled back to the VBC. Pull back to the VBC holds more often than not. It stands for bull bear cross. When price crosses above that green line, we're bullish and anticipate higher prices. When price crosses below the green line, we're bearish and anticipate lower prices. So we pull back to the VBC, the pullback held. That sent us up to the long target and a retracement back to the target. And blue and climbing turned to red and falling. That took us below VBC. So now we're thinking short. And it takes us down to the target and beyond to these lows from Friday. Buyers come in, bid it up, take us all the way back to the long target. We overshoot it, but then we quickly retreat. And we're sitting right on top of the short target. Very consolidated, sideways trade. Like we had on Friday and on Thursday. Goal, here's the open. We opened and ran right up to the target and to the weekly zone. Consolidated at the zone. Blue and climbing turned to red and falling. Then we dropped. We've now retraced to the VBC. Pullback holds more often than not. But red and falling has turned to blue and climbing, and so on the way down, that's potential support. I would let price get below this low. In fact, 2407. Yeah, 2407 down to 2401. That would be a $600 per contract. Silver, here's where we opened at 3160 and we ran up to 3260. When silver moves a dollar, that's worth $5,000 per contract traded. We got a retracement. Right now we're sitting at the long target. And the euro came right down to the zone, bounced, and that's about it. The high is right here at the bearish cross from last Thursday. Okay.
I'm here, D, when you're ready.
Yep. Go ahead.
Okay. All right, here we go. There it is.
All right, looks good.
Excellent. Here we go. Good afternoon, everyone. Happy Monday. Today is the 20th day of May, 2024. Now, if you have not taken a free trial with us and you'd like to take a free trial with us, go here to mytradingiq.com and click on this purple button right here. When you click on the purple button, you will be sent to this page. Refresh. You'll be sent to this page where all that we ask for is your name, your email, and your phone number. Down at the bottom, if you have a NinjaTrader, give us a NinjaTrader machine ID. If you have TradingView, give us a TradingView login ID. And what we will do is enable all the indicators for you so you can get them set up and running on your desktop. Okay? Okay. We didn't do a lot of trading today. The markets were really, really flat, and it was all we could do to get our goal for the day. And we actually stopped when we got the goal for the day. This is one of those days where if we quit when we got the goal for the day, which we actually did end up doing, we stopped trading when we got the goal for that. I didn't really mean to, but I got into the lesson plan. I let it run a little longer to get the goal, and then I got into the lesson plan, and I ran the lesson plan all the way to the end of the morning session. So if you're going to read the spreadsheet, you got to read all CFTC risk disclosures down at the bottom. Today, we made 3 ticks in the NQ, 12 ticks in the Russell, and 2 ticks on the ES. Put us at exactly $100 per contract this morning. Today, it took 55 minutes and 5 trades to get there. At that point, with 17 contracts, we're up $1,700, and we took a total of 5 trades this morning. So on a month now, we're up $4,707. So over 14 business days, averaging $336 per contract per business day. On the year, we're at $38,442 over 45 business days, averaging $404 per contract per 2-hour business day. Now, this is the part you want to be in right here. Consistently profitable, consistently getting your goal, just like I did, even though it took a little longer, today to get there. Consistently getting the goal, and then quit when you get the goal for the day. If you were to do that this year and add 1 contract per month, so far this year you would have averaged $1,137 an hour. If you were to do it like me, starting in January of last year and adding 1 contract per month, so far this year you would have only had to work 34.33 hours, and you would have averaged $5,908 per hour. Now that's down quite a bit from Fridays. On Friday at this point, we're averaging over $6,000 an hour. But today, because it took a little longer to get the goal for the day, we're down to $5,908. But we did get the goal for the day, and that's what's important, right? All right. All right. Oops. So let's get into the actual trades. Now, over here on the YM, I only had 1 trade today. Most of the markets you're going to be able to see in one screen. But here's the YM. You got to crunch it up a little bit to see the YM, the whole thing in the YM. There's our 1 trade, our 1 break-even trade. Let me just do this really quick. And there we go. Okay. We had 1 break-even trade here on the NQ this morning. The next thing that we actually did, I'll get into the lesson plan. There was a blue arrow here during the lesson plan, a blue arrow here. I think I was talking about it during the lesson plan, so I don't really remember. But that would have been a break-even trade for me. Or if I got slippage on the entry, it might have stopped me out right there on that pullback. During the break, 1 blue arrow right here, 1 big blue arrow right there, and that was it. Let's see. On the Russell now, we had on the Russell. Let's go back to the beginning right here. Okay, so on the Russell, we had just a couple of trades. I don't have that many trades to go over. I only had 5 trades to go over. Our first trade was right here. We picked up 2 ticks on that one. Our second trade was right here, coming out of the weekly trading zone. We picked up 10 ticks on that one. I wish I would have let that run because that would have given us the goal for the day. But moving all the way over here, there was this blue arrow, but it was going right into the zone, so I didn't do it. Then there was this blue arrow here during the break that I didn't do it. That worked out okay, but it didn't put in a higher swing. It changed directions, and there was an opportunity right here that I didn't take. Okay. Now I'll get on to the S&P. And on the S&P 500 today, we really only had 1 trade, but it was profitable. And this right here is the short-term trend lines that you see right here. I was going over this morning for one of the guys asked why it's white out here, and it's because the long-term was still bullish, but the short-term turned against it in here. So I put those on so we could see it. Okay. For all of you guys who don't know that or wondering what those things are, that's what they are. All right. There was 1 blue arrow here during the, I mean, this is the whole day on the S. From here to here is the whole day on the S. You wouldn't do that going into the weekly trading zone. We took this 1 bounce off the ribbon right here. All right. Now the rule for this, if the outer bands were the right color, you would have had a purple arrow there. But because they're not the right color, the rule is right here. Go to trade rules. The rule is right here. A long trade without the slingshot. All right. The black line on the ribbon must be on the bottom and in the green, and price must touch the ribbon on the pullback. Okay. That's what we had right there. The black line's in the bottom, in the green, and we touch the ribbon on the pullback. Now, I got to add to that because it cannot touch the black line on the pullback. If it touches the black line, then it has to have the slingshot. Okay, if it touches the black line, then it becomes a green arrow with the slingshot. Right? If it touches the black line and does not come out of the oversold or does not get into the oversold, then it's nothing. Okay. And that was it for the ES today. Now the NQ, which is where we normally have the most trades, we did not today. We did get our goal for the day on one trade we took on the NQ. Can you believe that? We only took one trade on the NQ. This is an 11 range. I'm sorry, I was using 11 range while we're in the lesson plan part of it. But I only took one trade on the NQ. It was right here, and I got 3 ticks on that. I should have let it go. I thought I needed 5 ticks to get the goal for the day. Turns out I only needed 3. And that was, hang on a second. Let me just do this. And this. And just a second. Okay. All right. So that was all that we did on the NQ today. Now this next half an hour, well, during the break, you see there were some green arrows, 1 purple arrow, some green arrows, a blue arrow, and nothing else. Now, I don't know what we're going to get today. The markets have been really, really quiet. You know, yeah, I don't know. I don't know how things went for Dwayne. I didn't hear his recap, but it is now 1 o'clock, so I'm going to jump into my recap with the YouTube part of it. Now let me get over here for a second and start that up. And it's going to be pretty quiet here during the next during the next half hour that we have left in here. I suspect it's going to be pretty quiet. But if anybody's got any questions, just type. Anybody wants to see any symbols, I'm happy to look at that too. The closest thing we have to a trade setting up right now is going to be a pullback here on the NQ and a pullback over here on the YM. All right. Now, before I get into that, let me finish with this. We ended the morning just 5 trades. 5 trades, got the goal in 55 minutes and 5 trades, $1,700, and that was all we did this morning. 5 trades. We're up $100 a contract. If you've not taken a free trial with us and you want to, go here to mytradingIQ.com, click on the button. It's going to bring you to this registration page. On this registration page, all that we ask for is your name, your email, and your phone number down here at the bottom. If you have an NinjaTrader, give us your machine ID. If you have TradingView, give us your login ID. Hit the register button, and we will get you set up on your desktop as quickly as we possibly can. Okay? Okay. Now, back in here. Now, this is a black arrow. As far as black arrows go, this one's not too bad because you got a pretty good amount of room to get to the swing high right here. You got plenty of room to get the stop to break even, which is part of it. But by getting to the swing high, you know, when you have more room to get to the swing high, those trades are usually better. If you look at the overall pullback, you know, there are two movements here. There was one here and a pullback down to there, and there was one from here all the way up to there, and pullback is down to here. So that's not a 50% retracement overall on this pullback. A pullback down here to the BBC would be just about a 50% retracement of the whole thing. And if you guys have been watching me for any length of time, you know that's kind of like my magic number. Pull back down to here. Okay. The market likes those pullbacks. It does, and there's just symmetry in it all. All right, so we're going sideways here, sideways there. Now, I was gonna show you something. Oh, I guess I'll do it. All right. So now we're still waiting for a pullback here and a pullback over here. We don't have either one of those yet. Okay. And let me come over here and refresh on this and see if everything's up to date there. You'd think it would be, but no. All right. So on the YM, we're still looking for that pullback. We are now in the overbought on the YM. So if we were to get a down close now that pulled us out of the overbought, it would give us a black arrow. Now that would not be the best black arrow. Why? Because it's going to be so close to the swing low. The high of this bar is 13. So it'd be 7 ticks below that right there at 6. Okay. It's pretty close to the swing low. It's not going to give you the kind of arrow that you're looking for there. Not the kind of arrow I'd be looking for anyway. All right. Let's see. May 22nd. All right, we are completely flat in the outer bands right here. And you see how the long-term direction is bearish and the short-term direction is bullish here. That's why the outer bands are white. We're completely flat there too. So we really don't have anything to look at here. Let's go look over here because it was just an indication for a trade. This morning on Exxon was back here. There was an indication for a trade back there. Let me go and just see something over here. And do that and that. And that. And that. All right. There was an indication for a trade there. And just a few minutes ago, there was one here on the SPY as well. Right, on the spider, I believe. I don't know what time frame it came off of. I think it came off a 5-minute. Let's see. Yes, it did come off the 5-minute. Okay, so we'll see where that goes. The risk reward on that is 1.03, so that means the target's pretty close, but the stop is pretty close too. And we got the green arrow long on the NQ15. So the alerts are just popping up everywhere. And we had there it is, the green arrow long on the NQ15. That is what we need to be in right now. All right. So what time is it? 1:07. Over here on the YM, we don't have anything yet. We could take a trade off the ribbon right here on the YM because it's black arrow. We didn't take the black arrow. And so we could take a trade on the YM there. Okay, we could take a trade on that YM. But did you see how we did get the NQ alert? Now we set that up. I think we set that up last week. That NQ13 green arrow long. It just let us know we had a green arrow long right here on this. You guys saw that, right? Right, everybody? Anybody? Well, here it is. I think my stop should have gone to break even already. Sorry, there it is at break even. Now, where should it go? It should go up to the prior swing high. It should go up here to the prior swing high at 94.50. It just took me out of break even. That was my second NQ trade today. Can you believe that? 2 NQ trades. That just doubled the number of trades I took today. Leading up to it anyway. Let's go back out here and check out this one more time. I don't see anybody out there on YouTube asking any questions, so we're good for right now. We're looking for a short here. We've got a high here of 119. We have a low of 112. Okay, now I don't think that we're going to get a trade over here. I don't know, but I don't think we're going to get a trade there. All right, so I want to kind of look at some other things that have been triggering trades this morning. Oops. The markets haven't really been doing anything this morning, so I'm surprised that anything is triggering trades, but at a possible buy on Intel, possible buy on SPY, possible buy on Meta, possible buy on Apple, possible buy on Tesla, possible sell on the QQQ, possible buy on NVIDIA. Okay. And that's the point. All right. So none of them actually gave buys. They all gave multiple buys. That suggests to me that the markets are really choppy. Really choppy. This, we want to see get all the way up here to the prior swing high. Okay, the prior swing high is what we anticipate out of that. Okay. Let's see. We have. Well, we need a higher swing. Now that we have the green arrow, it's got to put in a higher swing before we can take it. We're not going to end up with anything. We might. There's a possibility we'll get a green arrow over here on the YM, but I don't know. Everything is going so darn slow. So that XOM thing, that was today, right? Go back and look at that again. It was going so slow this morning. No, that was Friday. Okay, I didn't think it was today. Yeah, this is today. So there was nothing today. Oh, from the open. After that on Friday, from the open today, from here to where it is now, I think. Well, there's something to be said. Nothing over here on the YM. All right. If anybody's got anything, I am prepared to put any chart on that you want to see. It is now the 20th of May. So how many days do we have left in this month? We have this week and next week. So we have 9 business days. Actually, there's a holiday next week, I think, isn't there? Pretty sure there's a holiday next week. Let's go here. Hey, I got, I put a different calendar on here. I haven't really chosen which one, but if we go to next week, when is the holiday? It's not this week, right? Friday. Yeah, it's not this week. I think it might be Monday. Is it the 27th? Yeah, it's the 27th. So a week from today is a holiday. I didn't realize that. A week from today. All right, well, that's good news. A week from today. But we only have 8 days left then. 1, 2, 3, 4, 5, 6, 7, 8 business days left this week. All right. Let's go back to this week. This is the investing.com calendar. And this is the other calendar that I normally use. Okay. It is Monday. Thank you, guys. It is Monday. This is the one that I normally use. Which one do you guys like? You know, with this, I filtered it so it only gives the US and the Euro. It doesn't give all the other worldly stuff. The other one, I haven't figured out how to do that yet. But this, if we go to the next week, it would say here Monday, USD Memorial Day. Well, starting here Friday. And so get right back into news on Tuesday. But this week, Thursday and Friday are only high impact things. Wednesday at 2 o'clock, 2 p.m. Wednesday afternoon, we have the FOMC meeting minutes. So that can move the market too. That's high impact on Wednesday, 2 o'clock in the afternoon. Then Thursday, pre-market, and at 9:45, we have high impact news. And then Friday at 10 o'clock, we have high impact news. Okay. Which calendar do you guys like better? That one or this one? I tried to spread this out more, but when I spread it out, it just puts border on the outside, just blank space. I tried to make it a little bigger. But you see, it gives all the same information. I think it actually gives a little more if I click on it. See, I can click chart and history and all that kind of stuff. Click here for full event details. I think it gives you a whole another web page full of junk. Yeah, there it is. A little bit web page full of it. So this actually gives you a lot more information. Way more. I mean, if I could filter it, so it only gives like the US and the euro or something like that. But how close-minded of me to think only the US and the euro are important. All right. So we don't have anything happening here. No trade zone, no trade zone, no trade zone, no trade zone. It's been a lot like this all day. All day. Okay, there's that one and this one. All right, so we have nothing there, nothing there, nothing there. Come on, guys, give me something. Possible Google long coming up. Google buy soon right there. Google buy soon. All these things that were possible. There was one I thought said net. Here it is. Short net. What day was this? May 16th. Okay, that was not today. Let's see what that looks like though. May 16th at 11:55. That was right in here. I don't have the here. If I put the TV trades on, you'll see it. And if I put shorts on the TV trades, here it is. There it is right there. 11:55. This is where it said to get short, and that was on the 16th. It said to get short right there. 32.15. It wasn't a very big drop down to there. It hasn't really done much since then. It looked big. This actually this says the 20th. Yeah, let me go back. This said created May 16th, so that's where I need to go. You're right. You are right. May 16th. Where is that? 15th. 16th. Here it is. So is this May 16th? This is May 17th. And I used to have it actually say the date and time. This was 2100. It says there 11:55. Now last triggered May 20th at 11:55. Last triggered May 20th at 11. That's what it is. Okay, created. The first one was created. Oh, no, last triggered May 20th, 11:55. I created the thing on the 16th. That's what it is. I created it on the 16th, and last triggered was 11:55. So this is the one that they're talking about right here. This 11:55 one. They're talking about. I created it. that it's talking about. Let's see, what else do we have here? Possible sell, short condition met. This one was on Google. And what day was this? May 20th, today at 11:05. Okay, right here, had a short. And that worked out pretty well. Green arrow long, purple arrow long. All right. That's pretty much all we had in there. All right. And that's all I got with that. Not a lot of action today. Oops, I gotta put this back on the yes. Yeah. Go back to yes. 7 range. This M7 range. And this actually triggered some alerts today too. I think the alerts that it triggered on the ES, I don't know if it's showing on this computer because they weren't on this computer. But the alerts that triggered on the ES, I think were on a 4 range from something we did last week. Anyway, right now I have a possible SPY sell. Did that just pop up? A long trade right there. Possible. But the ES was given some alerts earlier. Anyway, let's get back in here to this. Because the ES wasn't giving us much at all in here. No trade zone, no trade zone, no trade zone, no trade zone. So you know what you can do? If the market's like this, you can actually go to a smaller time frame if you think there's enough volatility. But when you do that, you have to change the sensitivity to like 0.15. Okay. And we'll see if it comes up with any trades in here. Oh, look at all those no trade zones. It doesn't really come up with much today. It just wasn't, there wasn't anything to go on today. Let's look at the bigger picture stuff. This is what Dwayne was probably doing with you before I came on. And what chart is this one? The NQ. All right. Now, that's not the one we're looking at. We're looking at this morning. We're looking at this one here. The NQ 5-minute chart. This isn't a 5 minute, it's a 30-minute. But the 5-minute chart. We're looking for it to come back down here and test the BBC. Once the black step line got inside the MA1 there, we're looking for it to come down here and test the BBC. It's almost gotten there now. Once it does get there, we should, once it does get there, we should have, well, probably a bounce off of the BBC is what I'd be thinking. All right, so other than that, the bigger picture stuff, this isn't really the bigger picture, it's just a 5-minute. Coming over here, what I did here this morning, what I showed everybody this morning is how this was an inverted head and shoulder pattern. Okay, let me back this out a little bit and I'll show you what I mean. It started, well, let me use this over here. Started here, then went down, shoulder, head, shoulder, neck. So this right here is what I was saying this morning. If it breaks through this, then it should break out to the upside. The problem is, where is the upside, right? Because these were all-time highs that created this. If we go here to a daily, oops, I don't mean that. If we go here to a daily, no, this is the all-time high right here. And that was from today. So that's the problem with this whole head and shoulder pattern. Now, when you get into something like this, there is a way to analyze it. But you have to go back to the stuff that we do on Wednesdays and the Wednesday lesson plan stuff, because this is all you got left. Leg lengths, okay? Leg lengths from Wednesday's lesson plan. This is your leg length down right here, right? So you had your 50% retracement back to here, roughly 50% retracement back to there, roughly. That's roughly 50%, we'll say. Back to there. And then you have the same leg length from there to there. Went a little through it with the wick right there. But then you come over here and you have the same leg length right here. So where's it going to go now? Well, using the same logic, and I think I just deleted all the stuff that I had on this, but I used this logic last week to get us to where we are right now, I think. Using the same logic, it would put you up here. Okay, up here, before too long. using the same leg length, the same information. Now we haven't had a 50% pullback here yet, so this could still be part of the leg up. This whole thing right here could be part of the leg up, and then we get a pullback down here to hit the ribbon and then push back up. That is something that could possibly happen here, but we're just about halfway through the year now. Just about at the halfway mark, and the market's been doing nothing but climb this year. All-time highs in all the markets. It's craziness. Doesn't make any sense at all to me, but hey, if the wheels are going around, just get on. All right, it's 1:25. We only have 5 minutes left, and right now the YM needs to pull back up, but it's going to be going down into the weekly trading zone. We can't do anything with that. We're just going flat and sideways here on the Russell. Over here on the ES, we're in a no trading zone. And the NQ is the closest thing we have to a trade. So nobody's got any questions? Come on, guys. Nobody's got any questions? You guys out there on YouTube, you almost never ask questions. You encourage the questions. All right, we only have a few minutes left. It's possible we could get a trade here on the NQ. We're breaking out of the no trade zones now on a couple of these markets. So I doubt we'll get anything on the YM because we have the weekly trade zone right there. And what will probably happen is it'll pull the ribbon down toward the zone. It'll pull back up into the ribbon right at the zone. So it's not a trade that I want to take when it's like that. Mike, where do you find recommended sensitivity for short or longer range charts? Here's the deal. The sensitivity is a setting that you create to show when the market is getting flat. All right, so for the time frames that I use, I've shown you a pretty good indication. Look, we just had all this movement. A pretty good indication of what it is when the market's for these time frames. Oops, sorry, I didn't mean that. For these time frames, when markets get flat. But all you need to do is go to a higher time frame. Like, let's say we want to see this. What time frame are you thinking? Like, and you should actually come into the other. I mean, it's great that you're out there in the YouTube one, but there's a little bit of a delay. If you come into the other one, there is no delay in the other one. But the sensitivities, let's just say we go to a 30-minute. Okay. What you want to do is adjust it. Adjust it so that the no trade zone shows up whenever there's a trend change and when the outer bands are flat. So, you know, if I get rid of all the extra stuff that's on this, here, let's just do it this way. Let's get rid of all the extra stuff that's on it. So you're really only looking at what you want to see. You're only looking at what you want to see. All right. You want the no trade zones to indicate when the market is flat. And it's actually pretty good right where it is. The 0.35 at a 30-minute. But if you were to go in here and adjust it, the bigger the sensitivity. Oh, this isn't even a 0.35. 0.15 looks pretty good. Like, that was kind of a You spoke to the 4, yes, so we weren't sure if there are other recommendations for the other products. Yeah, there are. But you just got to go in and test it out. Like the 30-minute right here, the 0.15 looks pretty good on the 30-minute right here. You want to show a no trade zone where you have a trend change. You want to show a no trade zone where maybe a little bit bigger, maybe a 0.20, because you want to have it where it's flat right here. And right here, make it a little bit bigger. So right there where it went flat, right in here where it flattened out. So you just have to adjust it till it's looking where it's giving you no trade zones where it should give you no trade zones. You can look historically and see that, but going forward, it's going to do the same stuff. Make that small adjustment, and you can see what the math is telling it to do on the chart. And so going forward, it will do the same thing. Okay, going forward, it'll do the same exact thing. So you just got to make the adjustment yourself. If you go to a larger time frame, like the 30-minute looks like 0.15 looks good for the 30-minute, maybe 0.20. Okay. But thanks for reminding me, because I almost forgot about that. So let's put all this stuff back on here, because I believe my time is just about up. You know what all these things do, right? All these individual things, Mike. These are the blue arrows. These are the black and green arrows. These are the outer bands. These are the little arrows, the overbought, oversold arrows. This is the black outer band right here, right? Purple arrows if you want them, and the ribbon. That's all the ribbon right there. Okay. Oops, I forgot to put the context back on too. Down at the bottom, you have your long and short-term context. We only want the long-term context to show. Okay. That's how you want it to look, except not on the 30-minute. Put it back on the 7 range. All right. Well, it looks like that's going to be it, guys. I've run over my time. It looks like the NQ is about to give us a trade. No, it's not. See this blue arrow that it did give here that I missed while I was talking about that? Ran down, but it didn't put in a lower swing, so you don't have another trade right here. So when everything started to move a few minutes ago, it gave a black arrow over here on the YM. It gave this blue arrow on the NQ that made out a really nice trade. That would have been a 30-tick trade right there. And this blue arrow here that you can't take because it didn't put in a lower swing. Okay, and we have some sell short conditions in that on Microsoft. Let's look at Microsoft on the 5-minute. Which one did that go to? Right here, Microsoft on the 5-minute. And so that was right in here. I put TV trades on. I don't have it on, but that would put it right in there. Yeah, well, that's good. It gave you the notice 5 minutes ago. 5 minutes ago it said possible sell soon, and then the next bar gave you the actual sell. Good stuff. Okay, we'll go back here to the NQ on that. All right. So with that, let me finish by saying, if you have not taken a free trial with us and you want to, go here to mytradingIQ.com, click on the purple button. There is no credit card required for the trial. Once you click that, you'll be sent to this page here. Fill it out. Down at the bottom, all we ask for at the top, name, email, phone number. Down at the bottom, your machine ID and your TradingView login ID if you have them. Give them to us and we'll enable you on both systems if you have it, or one system if you have it, whatever you want. All right. That is it. With that, I can pass it back out to fabulous Phoenix, Arizona, and Studio A, overlooking South Mountain, America's largest city park. Wayne, if you are ready.
I am.
Excellent.
Okay, recap of the morning session.
Today it took 55 minutes and 5 trades to get to $1,700.
Good job.
Thank you.
And a flat market.
Yeah, it was a really flat market today. But that'll change.
Okay, guys, we'll take one last look here at the daily chart. The all-time historic high, 53.49, put in last Thursday. Today's high, 48.25. So we got a high and so far a lower high. Question is, will that change as we go into the close? Now, it's going to look like a triple top, but you got to go in and showing from 33.5, 49, and then today 48.25, and we're coming off the high of the day. So you can see that on the 30-minute. So where are we headed? Well, we're below the BBC. So most likely we're headed back to the low of the day. And then right below last week's zone, we've got a bullish cross right here. And that is most likely good support. And then below that, you got the short target. To become a member, go to mytradingiq.com. If you have any questions, call 949-42-EMINI or send an email to support@cfrn.net. Along with 2 hours of live training every trading day in our live training room, you also get private one-on-one mentoring, no additional charge. The indicators that you own for live and the strategy that you learn are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETF, doesn't matter. Price flows the same across all markets and all time frames. Support to resistance, back to support, back to resistance. Over and over, again and again. It's a never-ending cycle. Also, as a passport holder, you get the Logic 247 alerts, the concierge trade alerts, weekly trading zones. You're able to attend the members only workshop every Thursday night, and you get the golden key that unlocks all of the private Telegram channels. mytradingiq.com. Okay, let's wrap this Monday with our good word for the day. Friday we talked about broken arrows. Today our topic is let God lead you. Psalm 23:3. He leads me in the paths of righteousness. Life is full of choices, decisions, and options. It's also full of people with strong opinions who will try to tell you which way they think you ought to go. If we could turn back the hands of time, nearly all of us would alter some of our past choices because they have caused us to find ourselves on the path of wrongness rather than righteousness. Sheep will gravitate towards whatever appeals to their instincts, such as a berry bush, even though it will take them away from the flock and the shepherd's protective care. They think they know the right path when they really have no clue. Have you been following your appetites and instincts rather than your shepherd? Now you might say, but God gave me a brain to use. Yes, and you need to develop it. But it's limited and it will only take you so far. The Holy Spirit desires to take you beyond those limits. Romans 8:14. As many as are led by the Spirit of God, they are the sons of God. So, how does God lead us? Objectively, through His Word, and subjectively, through His Spirit. As you read His Word, you hear His voice, and as you lie down. Psalm 23:2. He impresses upon your heart what he wants you to do. If you have gone onto the wrong path, turn to God. He will guide you back onto the right path. Now, you say, would God actually speak to someone like me? Yes. John 10:3 teaches us, he calls his own sheep by name and leads them out. He goes before them, and the sheep follow him, for they know his voice. So for today and every day, let God lead you. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.